Are your existing solutions able to take advantage of real threat intelligence? Common solutions like firewalls weren't designed to handle the massive and growing volume of threat indicators. This challenge often results in significant gaps in your protections, even when you think you have it covered. You need to protect yourself by filtering network traffic against unique threat indicators in a way that allows you to act. PolyWall by Bandura Systems is the solution that filters over 10 million indicators right out of the box. Developed in partnership with the Department of Defense, PolyWall is affordable for companies of all sizes. Get your free trial today at bandurasystems.com. Rapid7 powers the practice of SecOps. Using shared data, analytics, and automated workflows, SecOps unites IT, DevOps, and security teams to make security an outcome of innovation. Rapid7 combines technology, expertise, and advocacy to drive vulnerability management, application security, incident detection, and log management for more than 7,000 organizations worldwide. Power up your SecOps practice with a free trial at rapid7.com/securityweekly. Skeleton keys, golden tickets, forged packs, DC Sync, DC Shadow. The Active Directory attack surface is expanding faster than admins can keep up with. Securing your environment begins with implementing least privilege administrative models, but does not end there. Many organizations send Active Directory syslog events to a SIM platform. However, logs are noisy, of limited scope, and are time-consuming to review and act upon. Active Directory is secure when it's clean, understood, configured properly, monitored closely, and controlled tightly. StealthBits technologies provide solutions that monitor, secure, and detect the latest threats against Active Directory. Visit them today at stealthbits.com to learn more. Welcome back, everyone, to Business Security Weekly. I want to remind everyone to go check out our on-demand material. You can go to securityweekly.com/on-demand. You can find webcasts there about penetration testing, Active Directory security, finding bad bots, all kinds of deep dives into specific technologies. And if you're interested in one of those, you can watch the on-demand material. So again, check out securityweekly.com/on-demand. Alrighty. We're here to cover the innovation update where we talk about various funding rounds, acquisitions, and lately, in the absence of Michael, who normally selects all of these stories, we've been filling in and we've been covering some of the financials and some of the investing aspect of it, which I am horrible at, by the way. I'm starting to learn more as we look at Tenable stock. It's probably no secret. I worked there for a really long time. And I'm like, wow, this market stuff's getting kind of interesting now that I have a personal kind of stake in it. I think before I didn't. So we're starting to talk a little bit about that. And Todd is still here. And with your background, we're going to pick on you. Maybe some stock advice for us. Ooh. Maybe after the show. Yeah, maybe you don't want to do that publicly. We're ready. We're ready.
Blue Horseshoe loves Anaconda Steel.
That's right. So in acquisitions, AlienVault is set to be acquired by AT&T. This is kind of an interesting move for a telco company to start investing in security. I don't know if you've necessarily seen a huge track record in that, but kind of interesting that they chose AlienVault. One of my concerns as a practitioner is AlienVault maintains OS SIM, open source SIM. I know a lot of times when you go under acquisition or you look at going public, some of that open source stuff can start to be questioned. I think Rapid7's done a great job of keeping a lot of their open source stuff open source while still maintaining a public company. That's just one of my concerns with this acquisition.
Well, certainly if you get acquired by somebody as monolithic as AT&T, it makes me worry a lot about open source because, it's not, it depends on who acquires you and what their attitude is. But when you get these big behemoth kind of companies, I've seen a lot of that sort of, we're not going to do this free stuff anymore. That's good for some people, but I don't know though. I mean, it's always scary to me when I see people get acquired by giant.
It can be challenging. I think strategically, the carriers have been very good at managed security services. So if you look at Verizon, AT&T, they all have CenturyLink, they all have sizable businesses there. And you've seen a trend, even with the independent SecureWorks, where owning and differentiating on technology becomes more important. So I think that's a big move behind AT&T. You're actually
trying to gain market share with technology. In other words, Alienware is really great at vulnerability management and SIM. Let's just say people believe that. Vulnerability management not so much. SIM pretty good, I think. That when they go to customers, they can say, well, we own this whole company. that does the SIM part of it. So you should use us for our MSSP because we acquired all this technology, right?
Yeah, and AlienVault has had a big push too with USM Anywhere, which is their cloud-based version. So that's their big strategic push to do it. But I think you're going to see the trend continue. You're also seeing it among the there's companies like SolarWinds that cater to MSPs. They just did an acquisition.
They did.
Related to security analytics.
Yes.
So I think you're going to see see more of this.
Absolutely. Cloudera is posting some earnings. They're down about 15 cents a share. I'm trying to remember exactly what Cloudera does. Machine learning. They do machine learning. That's all we need to know, right? They do machine learning. So subscription services, data management, machine learning, analytics for customers. That's what it says. That's a really terrible description of what Cloudera does.
Yeah, they're like one of the commercial Hadoop providers.
Yeah.
So, and I think their claim to fame, right, is the CEO is the former CEO of ArcSight.
I gotcha. Okay. Well, nothing interesting there, judging by your reaction to that. So move on to the next one. We were talking about Splunk during the break, and so this is interesting. So they've reported. Their Q2 closed July 31st of this year. So they're reporting in Q2 they got 500 new customers. Is that to excite the market? Is that because we don't know who these customers are or what they actually sold them? That obviously matters, I think.
Yeah, it's tough to say unless you know what the expectations are, right? So what have they been adding? I think
a lot of times those kind of reports too are written for analysts, so the analysts know because they're tracking that market segment, or they're even tracking that specific stock. So if you have to be careful reading those reports because they are written for analysts, and they know that the people reading it are experts on it. So that when they say 500, the analysts all go, "Oh yay," or they go, "Oh no," because they know, but you don't know.
They know the metric already.
You'd have to go in and do some more research to actually say, is 500 a good number, a bad number? And I presume the analysts would also know what those 500 represent. Is that 500 giant companies that just bought in, or is it people that they had a special down at Walmart and they were giving away a free copy with every copy you purchased? So they sold 500 new ones, but the analysts would know that because they know that market. They know exactly what's going on there. So that's
and it should reflect in their revenue too with the new customers.
I can tell you, in being a former analyst, Doug's right. We had very specific metrics, right? So if I was following Splunk and they reported their quarterly results, I would be able to tell you within split seconds whether 500 was a good or bad number. Yep. But you need that context, and I've also seen when people put out on the earnings releases, like you'll see a headline that says XYZ reported X cents per share, and then that may not be meaningful either because
it's the same thing.
Reported earnings are not necessarily what everybody looks at.
But you can go look at the chart. So like Todd said this during the break, but you can go look at the chart, and if you look at the chart over time and you compare it to other reports like this, you can start building your own analytics and saying,
I see. Yeah.
If you look at the chart on that day and it goes up a little bit, that doesn't mean much. But if you look at it over time and you see it start to trend upward, you can say, oh yeah, when they reported 500 new customers, it started trending faster. You can start to build your own analytic in your head about
their revenue reportings of $388.3 million, they claim are up 39% year over year for this quarter, ending July 31st. So I guess my point is, if they're reporting 500 new customers, they're reporting a 39% year over year increase in revenue, they're still growing tremendously as a company. Even if some of there might be different factors involved, we look at the market as a lot of startups that are targeting Splunk to rip and replace or lower your investment in Splunk is the messaging for a lot of analytics companies, security analytics companies out there. The growth numbers for Splunk tell me that's not really, it could be happening, but it's not affecting the overall growth of Splunk.
That growth rate, right? I mean, you can look at it, 39% for a company that size is still very, very good. There's been few companies that kind of get to $1 billion, and then usually they hit a wall. Palo Alto Networks is another one who continued to just show great growth. I mean, they have a quarter here or there where things are a little squishy, but 40% growth for Splunk. And look, I'll be honest. I mean, how many years have we heard that Splunk's expensive? Competitors are coming after them. Yeah. And they
that has been many years. Yeah.
It's been several. So they continue to execute pretty well, and they're doing some cool things like buying Phantom. Right. I think that's
that was a great
cool
acquisition. Yep, absolutely. So Fortinet has crossed the innovation milestone of over 500 issued patents. And you were saying earlier, this is a strategy for Fortinet, right? They're collecting intellectual property, and that's kind of one of the things that they do to differentiate themselves in the market, or other reasons?
To protect themselves. And I think, if you look at different companies, they have different core competencies, right? So with Fortinet, it is the technology. Nothing against them, but their sales and marketing has lagged peers over the last few years. It's getting better, but they're really about technology, price, performance. One thing you do have to look at, though, with patents is what does 500 really mean? Because you can have one patent and issue it in 200 countries, and then you have 200. I know that's not the case with Fortinet, but it's
but as a market analyst, you had to be conscious of things like that, right? Yeah,
and that's the Bell that's the Bell Lab strategy from long ago, which is you take a bunch of you take a bunch of smart people and you invent new things, and then you have sellable goods that it attracts investors to you, but it also has things you can divest or you can sell off or develop even more new things, and so I think that's why they're trying to do that. They want to be a skunk works kind of place to put together new stuff.
And they're very strong. Technically,
so
that's a core competency for Fortinet.
Absolutely.
And honestly, you don't need a lot of great marketing if you've got what everybody wants.
They've done pretty damn good.
That's right. I'm
in that vein, I'm a huge proponent of, if you're continuing to grow, and you're growing at a rate that's satisfying you as the founder and your investors, that you don't need to put a whole bunch of money in at certain points in time in marketing and sales, right?
Yeah.
Like grow organically for as long as you have. There was at least one startup I met with at Black Hat, and great technology, great team. Like if I was an investor, I'd be investing, right? And I told them, I'm like, so like, how are you growing? It's like, we're gaining customers, based on our reputation, based on our connections. I'm like, good, keep doing that. Until such time you start to, I think you got to do it before you hit the wall, right? You almost have to have a crystal ball and kind of see, like, I know I'm starting to exhaust my current resources. Now I need to put some more money into marketing and have a more effective program.
Yeah, sometimes you're pressured by the market too. So a few years back, Palo Alto's cranking away. Fortinet had a little bit of a growth stumble. Because Palo was spending so much money on sales and marketing, Fortinet was forced to. Actually, so was SourceFire before they were acquired. They both had to come back and say they were doing big investments. You might recall this because you would go to Gartner or RSA or Black Hat and see this gigantic Fortinet tractor trailer that they brought in. You don't see that anymore. But they also burned through a few chief marketing officers too. So I think your point's right. It's a balance, and I think they got pushed too far to spend so much. I don't think you need a tractor trailer.
That's a difference. Right, that's a difference, though, in being proactive and reactive. So if you're always trailing the market and you see that your competitor is now marketing more, and you say, "Oh, we got to market more," that doesn't necessarily help you. You need to be the person that was marketing first and say, that need to be your strategy, not your response to someone else's strategy. Because if it is, you'll get out ahead or you'll lose, depending on how well you do it. But the idea is that when you're following, you're just chasing money with more money, and that doesn't necessarily work for you.
Well, and to both of your points, right, and use the trailer as an example, you have to be marketing the right things. If your messaging and positioning is off, and that changes probably, quite often. But if your messaging and positioning today isn't the right messaging and positioning, you can do all the marketing in the world. It's not going to convert to sales.
And you got to know. And you got to know your customers. I mean,
you got to know your target profile.
Look at New Coke. I mean, if somebody went out and spent $1 billion developing a new product, and they didn't know their market, and then they went out and spent $1 billion marketing the new product that nobody wanted, and they basically lost billions of dollars.
The only company successful with that has been Apple.
It's not about soda anymore. Don't you read the journal? It's flavored seltzers. Alcohol and non-alcohol.
Hey, we had seltzer in Rhode Island before anybody knew what it was.
Alcoholic seltzers and sodas are huge market right now.
Yeah, it is. I mean, I think Pepsi just bought SodaStream last week.
Yeah, because it's healthier.
Right.
Supposedly. You make a good point, though, too, around a lot of these companies that are investing a lot and when they do acquisitions. But, if you look at Fortinet, the bulk of what they sell is still the core next-gen firewall UTM solution. So even though they're in all these other areas, it's still not a big portion of what they do. So a lot of times these acquisitions don't tend to.
But that can be smart fishing too, though. I mean, that can be. We got this thing, and this thing is great. The hula hoop, it's awesome. It's not going away anytime soon. But maybe it may go away someday, and we might want to be sure there's another new. The trapezoidal hoop is out there on the horizon, and we've got something new. So you buy a bunch of cheap stuff and you throw it in your backpack and hope something sticks.
It works, and they don't pay. They don't overpay. So it doesn't take much to get a return on 40 WAF. right?
Yeah,
You have to
you evaluate all these small players up, and you can go out and buy them up for nothing, and then throw them in there, and hopefully one of them is going to be the next big thing. And then if the 3 other ones fail, you still got that one next big thing. So that's that other division that has to be out there fishing ahead,
right,
while the other guys are still bringing in the food. So somebody's got to go out there and catch the bait.
Yep.
We talk about CA as it stands today. Of course, they're being acquired by Broadcom. They've made some very strategic acquisitions, I think, into security. Going all the way back to 2013, right, where they picked up Layer 7 technologies for API management. I think they were ahead of the curve on that. I field a lot of calls about how to manage and secure APIs today. So that was a really good kind of crystal ball acquisition. They got Exedium, which gives them the privilege, identity, and access management play to start putting that in place too. There's a tie-in, I think, to PIMs in the market that are appealing more towards developers rather than the more corporate use cases. Of course, Veracode was their big security acquisition that happened in March of last year. They also, on the development front, BlazeMeter, SaaS-based open source testing execution platform. They've kind of dipped their toe into the water, maybe their whole foot in the water in security. How do you think that, changes with them being acquired by Broadcom?
That's a good question.
Talk about a crystal ball, right?
Well, I think I'm still trying to figure out the strategic rationale of Broadcom buying CA other than access to more software revenue and high margin revenue. It sounds a lot like Intel McAfee. McAfee's much harder core security than
some of the acquisitions from CIA.
Just the bulk of CA you're getting is still mainframe and distributed systems management.
Maybe Broadcom's they're trying to add some of this stuff into chipsets. They're trying to find, maybe there's something buried in there.
Sorry. Security in the chip?
Well,
Could be. I don't know. I don't see all that technology at CA today. They seem to be playing more, I think, in 3 different, maybe 2 different spaces, right? Because also RunScope API monitoring. I think they've got a developer market specific with that API security problem. They've got the privilege, identity, and access management, and then they've got more traditional web application security play. And those are the 3 categories they're starting to play in. And the API and Veracode stuff has a certain tie together. If I want one-stop shopping to secure my web applications and help me get control of my APIs, I can go to CA.
Yeah, I like what they're doing now versus what they were doing 10 years ago, right?
Yeah.
Where they had an endpoint product that was an AV plus all this stuff, and then they bought Netegrity, and but a lot of what you're saying, sits around applications and systems, so that's more in tune with what they're doing.
So we'll see what happens with CA. It's been an interesting story to follow between their acquisitions and then them getting it. The story that I had in here was short interest in CA expands by 27.2%. What does that mean?
Yeah, that means people are selling the stock. A lot of times when you get a transaction, it's just kind of the arbitrage play. People come in and, short one, long another. It's all related to probability of whether a deal is going to close or not. So
both directions. Some people are selling, some people are buying based on a transaction.
Shorting
right?
typically means you think it's going to go down. So if they're shorting interest, they think the interest that's being paid is going to decline. So they're selling it at the day's price with a promise of delivering it out in the future. So that short sell.
Okay.
So what happens is I sell it to you for 10 and you agree to buy it because you think it's going to go up. And then instead what happens is it goes down to 5. I buy it at 5 and sell it to you later, and then I make 5 on the deal. So that's what a short sell does.
Gotcha. Yeah, I'm trying to rub off my brain from Wall Street days, but whenever you had somebody buying, when you had a company buying another and it was a stock deal, you would either you'd short the acquirer, one of those two. You'd long short, Broadcom and CA, and try to get the spread, capture the spread of the deal.
It's all option. It's like put call option trading. So you're basically gambling on the future.
And the wider you see the spread, which would be whatever if Broadcom said CA is worth $45 a share, and if CA is trading at 40, that's a pretty big spread. That means there's some uncertainty around whether that's going to happen.
Right.
Could be regulatory.
And that's a big risk reflection. So the spread is going to tell you like a risk,
right?
Because that means nobody really knows. If people are buying and they think it's going to be 20 and somebody thinks it's going to be 100.
Does it impact my part? If I'm a CISO today and my organization's looking at acquiring CA products, does that impact my purchase, or does it potentially impact the products in the market, or do I just not pay that much attention to?
Oh, I think it could impact your perception, right? If Broadcom's buying CA, I mean, it
puts a lot of unknowns in there.
Yeah, because most people don't understand a chip company buying the software. It's natural uncertainty. So yeah, it could create pauses
uncertainty in the market. Yeah, sure.
And those short sales make people nervous. I mean, if I see that, it makes me nervous.
Yeah, well, what's crazy is there is a whole investor class
that
comes onto these mergers and acquisitions. So what would happen in my space, and I would get all these calls about, what do you think? Why are they doing this? Or is there any overlap? Is there any antitrust risk? Because people are trying to play to profit off of that.
It's the esoteric of esoteric.
Well, you want to know who is extremely happy about the CA news?
Who's that?
Every Wall Street analyst that's covered CA for the last 15 years.
Because something's happening,
right? Because they don't have to cover it anymore. Well, it's been a slow growth story, right? It's been a long road, but they're better off being part of something else, or better off being private and trying to retool the business to grow. But like you said, what they've done in security is a lot more interesting, I think, than their previous approach. But because they've made multiple runs, I tend to be a skeptic in their ability to execute on the security side.
Awesome. Any other companies that you're looking at today, that mergers, acquisitions, funding rounds, that you think is interesting?
I didn't know there was going to be a quiz.
Sorry.
Yeah.
Just anything that you might have seen that's out there in the market today. Well, I can tell you what. Go ahead, Todd.
Well, Gigamon.
Yeah.
Right. So Gigamon just did this acquisition of a company called Iceberg. Right. That does. I don't know exactly what they do, but it's SOC focused. It's analytics. It's taking data from your network, and the analytics are being done in the cloud. But what's interesting is, Gigamon's life has been to be a packet broker, right? To take network packets and to distribute it to security tools, network performance tools. So now they seem to be making moves to go more deep into security, like adding security analytics. And I wouldn't be surprised if you don't see them actually doing some DPI related stuff. So I think that'll be interesting to watch. And then does Ixia respond to that? Ixia has a threat intelligence gateway. We never see it, called Threat Armor, but are they going to start to make moves? So I am hearing that Ixia is going to do another small acquisition, and I wouldn't be surprised if it mimics what Gigamon is doing.
Yeah, for sure. I have to say, overall, the funding rounds that I'm seeing are pretty awesome in security. And that's specific to a lot of the companies we track. So we looked at Black Hat, for example, and we went through all 300 companies that were exhibiting at Black Hat. We tracked how much they're spending at Black Hat, and also what their funding rounds were. With respects to like what they're spending, and then we kind of whittled down the list based on what we knew of companies that were like, all right, yeah, we know their story, we know what they're doing, we want to meet with new and interesting ones. And so when I ended up with the list, and we did a lot of segments on this, there was a great rounds of funding in all of the companies that we were interested in, which made us feel good. Like I felt like we made good choices, similar to where the investors were making choices in companies that have potential to grow. We made choices based on technology as well, and there was a lot of overlap. So I think if you've got a good story with great technology and you can sell it, that's why I asked the question, like how many customers, right? I think the market is very sensitive to that. I see more investing in companies that can actually prove they can sell product. Less and less companies that are like, hey, I got this great idea, you should invest in me. And I see a percentage of that as well. I think cryptocurrency is one where may get some investment, and it's a risky investment, but there's no product yet. But outside of that, I mean, there's a lot of great companies selling products, solving people's problems. They're getting great funding, and we always see that report where security, investments are down. Like, I'm not seeing that. It's not down to me.
To me, a couple things happened. One of them was that the term cybersecurity and so forth became mainstreamed, which means there's more people out there in the world who don't hear that and say that's some weird esoteric thing I just really, really, really don't understand. And I think there are also more people that came out of this background who have money, who want to invest. So all that's driving this funding sources, because suddenly there's a person who not only understands what you're doing or is interested in it, they also made a whole bunch of money doing it themselves and want to reinvest. So, you have that sort of, and that didn't exist 10 years ago.
Right. No, it's a great point, Doug.
Yeah. No, and a couple of years ago, right, the review was it was going to be Armageddon.
Well,
there are a lot, right? I mean, you go to RSA, But I remember leaving RSA in 2017 going, there's no way there's going to be this
More.
many companies. And then last year was like, wow. But to your point, too, the companies that are executing are getting rewarded, and showing customer traction is critical. I mean, I know for us that was a big factor in our raise, right? Because there is thousands of companies going out there that with a great idea. You're also getting private companies sit around private longer, right? So even though Carbon Black went public, you saw both Cylance and CrowdStrike do I think it was a Series F.
They did. They both did funding rounds.
Yeah, the letters are getting longer because the companies are staying private.
Right.
But
I think CrowdStrike would be the next to go public. It's pretty much what I've gathered from talking with everyone and analyzing it.
It's an interesting game because it's this has been an age-old rule. It's always good to be the first one out. So Carbon Black is the first next-gen endpoint, and then everybody else gets compared to them, right? That's why Tenable,
category king, right? They're trying to establish themselves as category king for sure.
Qualys went public, right? So then it was like, okay, they're the first in Vuln, and so Rapid7 didn't want to go right after, and actually Rapid7 did some strategic things to change their business. So I wouldn't. What's interesting about Cylance and CrowdStrike is that the two CEOs worked together at Foundstone, right? And I think that there's respect, but no love lost there.
Yeah.
And both companies are headquartered in Irvine. So maybe we could do a live podcast from their
do like the
flag
rivalry,
flag football game out in Irvine.
Arm wrestling, something, right?
We should set that up. That would actually be fun.
Yeah. They're going to play beer pong. until
Pruno Pong.
Pruno Pong, that's right. Well, Doug and Todd, thank you both for appearing on this episode of Business Security Weekly. I encourage everyone to check out Bandora Systems, bandorasystems.com/Security Weekly. We'll get you there. Thank you, everyone, for listening and watching. We'll see you next time.